What's going on, YouTube? Oh, it's Richie back with another video, man. Today's video, we got every type of investment explained for beginners, man. I fucked with the last video, man. Let me go check that. A Life If You Master Money in Your 20s. That was a good ass video. Before I start the video, man, because I had a very interesting conversation with one of my homies, and he was just explaining to me how I shouldn't let the money control me, and you know what I'm saying? There's bigger life to money, and bro, I agree with him 100%. My whole point is that money is just a tool for freedom, y'all. Like, let me get it, y'all. Money is just a tool for freedom, y'all. The money isn't the end all be all. You feel me? Like, money is just, like, imagine you want to build a crib, right? How the fuck you gonna build a crib without the hammer? How the fuck you gonna build a crib without the wood? How the fuck you gonna, you feel me? Money's just the same thing as that. It's just a tool, and it's an amplifier to help you achieve your physical goals while you're here on this planet. But without further ado, man, that's all I really wanted to say. Yeah, man, money isn't everything, but it's very important. Like, you operate through your everyday life with money. Like, to help your parents out, you're going to need money. To raise your kids, you're going to need money. To live life, bro, you're going to need money. Even the device you're watching this on, bro, you paid money to, whether you're watching me on TV, laptop, phone, you paid money to have that. So, yes, money isn't everything, bro. It's just but I think it's a very important piece that you should learn. Like, bro, you should understand what the fuck your money is. Because imagine you, right? You're just going to work. You have no idea what money is. You're just simply walking through your life. Bro, these motherfuckers can print an infinite amount, and you're going to spend finite energy. Let me put that in simple terms. I could give you I could go outside and rip out a piece of grass out the floor, and I can make you do anything for it. Therefore, I have an infinite amount of material making you do physical labor, making you push out physical energy. You feel me? So it's just like, that's all I want to say, man. Y'all might have skipped over this, but I thought that was just very important to say because, like I said, bro, over here, I actually care about y'all, man. Of course, you need to get money, bro, but obviously it ain't the end all be all, my nigga. It's just a part of the equation, so you could get what the fuck you want. But, man, without further ado, my boy, let's get straight to it. These are hey, I'm gonna keep it 100, bro. These are my favorite videos to watch because it's like, I don't know, bro. It's just money. It's just like, we all want it, bro. It's like we all want money. It's just very interesting to learn. It's just like, once you really learn what inflation is and how you can make your money work for you, it's very interesting, bro. And it's honestly like very liberating that, you know what I'm saying, that we're able to do this shit. But without further ado, y'all, enough yapping. Let's get into the motherfucking video. Every investment type explained for beginners. Let's go.
When you buy a stock, you're purchasing a small ownership stake in a company, like Apple, Amazon, or Coca-Cola. That means you benefit when the company performs well, because the value of your shares tends to rise. On the flip side, if the company struggles, your investment can lose value. Stocks are known for delivering some of the highest long-term returns among all asset classes, which is why they're a cornerstone of most investment portfolios. They're also easy to buy and sell through brokerage accounts and can pay you regular income through dividends, your share of the company's profits. However, prices can fluctuate wildly in response to news, market trends, or economic shifts. You're also exposed to company-specific risks, like poor management or declining sales. Plus, emotions like fear and greed often lead investors to buy high and sell low, hurting their long-term performance. Bonds, often considered
Stocks, bro. Let me tell you, I was bro. All right, so first let's discuss what stocks were, bro. Before Robinhood, if y'all know what Robinhood is, bro. Before Robinhood, bro, to buy a stock, you would literally have to go to like a person, a broker, and then have to buy it from like that point. But now, bro, if you literally have your fucking phone, bro. Like, I don't got my phone because I'm recording with it, but bro, now you can literally go on your phone, Open up the Robinhood app, open up the any broker app, and now you could literally buy fractional shares, bro. If y'all didn't know how I used to do it before, literally you'd have to basically go to a middleman, but now you don't need to, bro. Stocks, it's crazy, bro. Stocks are used to be like let's say you wanted to buy, I think Microsoft is like 600 for one share. So just think of a big ass pie or a pizza. Half the pizza is $300 and the other half is 300. Put those together, that's 600, aka the one share of Microsoft, one pizza. You used to have 600 to go buy it, but now, my nigga, now you can go use the app and just buy like one slice. Just buy $20 worth of it, $40 worth. You feel me? But yeah, man, that was stocks. Like,
The grown-ups of the investment world. When you buy a
we live at, hey, my boy. We live in the easiest time to invest we live in the easiest time to have your bread, make you some bread. Like, come on now, y'all. Lock in for me, Brody. Come on now, man. Lock in for me.
You're essentially lending money to a government, municipality, or corporation. In exchange, they agree to pay you regular interest, called the coupon, and return your original investment or principal at a fixed maturity date. Bonds are seen as more predictable and less volatile than stocks, making them a popular choice for conservative investors. One of the biggest advantages of bonds is stability. They typically provide steady income through interest payments and are often used to balance out riskier investments in a diversified portfolio. Government bonds, especially those from stable countries, are considered among the safest investments. However, their returns are usually lower than stocks and they're sensitive to interest rate changes. When rates rise, bond prices often fall. Some bonds, like high-yield or junk bonds, also carry higher risk of default. This means not all bonds are created equal, and it's important to know what you're buying. A mutual fund is like a financial smoothie, blending together dozens, sometimes hundreds of different investments such as stocks, bonds, or blending together dozens. A mutual fund is like a financial smoothie, blending together dozens, sometimes hundreds of different investments such as stocks, bonds, or other assets into one convenient portfolio. Instead of picking individual companies or bonds yourself, you pool your money with other investors, and a professional fund manager handles all the buying, selling, and decision-making on your behalf. The main goal of a mutual fund is diversification, which helps reduce risk. If one investment in the fund performs poorly, the others may help balance it out. This makes mutual funds especially appealing to beginners who want a simple way to invest across a broad range of assets without needing to research every single option. However, they often come with management fees that can eat into your returns over time. You also don't have control over the individual investments within the fund, and actively managed mutual funds can sometimes underperform the broader market, especially after fees are taken into account. Index funds and ETFs are two of the most popular investment options for passive long-term investors. An index fund is a type of mutual fund that mirrors the performance of a specific market index, like the S&P 500. Rather than trying to beat the market, it simply matches it. This means fewer trades, lower costs, and consistent returns over time. An ETF, or exchange-traded fund, often tracks the same indexes as index funds but trades on the stock exchange like a regular stock. You can buy and sell an ETF throughout the trading day, making it more flexible than a traditional mutual fund. What makes both of these so appealing? Simplicity, low fees, and built-in diversification. With one purchase, you're investing in hundreds of companies at once. It's a straightforward way to spread out risk and capture the overall growth of the market. However, if the overall market drops, your investment will too. And while most ETFs are broad-based, some are hyper-focused on specific sectors or trends and can carry higher risk.
I think that's what I had. So, right here, the index fund ETF. I got one. It's Vanguard. I'm pretty sure it's the Vanguard growth ETF. So I had Nvidia, Apple, Tesla, different like tech companies. But basically, it's just gonna grab all those companies that I listed or whatever. For example, we'll just call it technology. Grab all those. It's gonna put it in one stock with like a. Make sure you guys, when you do this, make sure your I think it's the expense ratio. Don't quote me on that, but basically your borrow rate. What the fuck you're paying for them to manage it. make sure that bitch is below 0.5%. Anything over 0.5, even 0.5% is a lot, but anything over that, bro, don't even do it, because that 1% is gonna add up over years. But what I got is, I'm pretty sure it's called the Vanguard Growth ETF, but it got all those shits in it. So shit, y'all go fuck with that. It's actually it's pretty cheap right now. I'm pretty sure it's only like $140 for one share. So hey man, that's all I gotta say.
When you invest in real estate, you're typically buying physical property, whether it's a single-family home, a multi-unit apartment building, a store.
I can't wait to get to this level, man. Real estate, and you're actually renting some shit out.
Storefront, or even a short-term vacation rental. The goal? To generate income and grow your investment. There are two main ways to make money in real estate: through cash flow, which comes from rent paid by tenants, and through appreciation, which is the increase in property value over time. In strong markets, both can provide solid returns. There are also some great tax benefits, including deductions for mortgage interest, depreciation, and operating expenses. And unlike stocks or bonds, real estate is a tangible asset, something you can see, touch, and improve. However, buying property usually requires a large upfront investment and ongoing maintenance. Tenants can be unreliable, repairs can be expensive, and selling a property isn't always quick or easy. Want to invest in real estate without the stress of buying, managing, or fixing up a property?
I've never heard of
That's
this.
where REITs, or real estate investment trusts, come in. REITs are companies that own, operate, or finance income-generating real estate. This can include everything from apartment buildings and shopping centers to office spaces, warehouses, hospitals, and even data centers. When you buy shares in a
Data
REIT,
centers.
you're essentially buying a slice of a professionally managed real estate portfolio. What makes REITs especially appealing is their accessibility. You can invest in them just like you would with stocks through a brokerage account. And many pay out high dividends since they're legally required to return at least 90% of their taxable income to shareholders. They also offer built-in diversification, giving you exposure to multiple properties or property types without needing to manage anything yourself. However, their value can drop when interest rates rise, since higher rates make their dividends less attractive. Cryptocurrencies like Bitcoin, Ethereum, and Solana are digital assets built on blockchain technology, a decentralized...
Bro, my bad for pausing the video, but I'm glad Solana's being brought up as top 3 cryptos, my nigga. Hey, come on, man. Everybody talking about XRP, Dogecoin, Cardano. Man, get the fuck out of here, bro. I ain't gonna lie. Ethereum, Bitcoin, and Solana is like top 3 right now. I ain't gonna lie. Don't buy. I'm not gonna say don't buy right now, because you should always be buying. What I'm gonna say is there may be time, like 5 years in the future, bro, either Hype, Zcash, or some type of other third coin. I think it could take out Solana, even Ethereum, bro. But back to cryptocurrency.
However, cryptocurrencies like Bitcoin, Ethereum, and Solana are digital assets
hype
built on
talking about
blockchain
Solana.
technology, a decentralized system that records and verifies transactions across a network of computers. Unlike traditional currencies, they aren't controlled by any government or central bank. Crypto has captured...
Oh, and I'm actually glad we stopped right here, bro. This is just a quick shout out, bro. Once I hit 500 subscribers, if you guys join my members only channel, I will have a lot of videos coming out on cryptocurrency, and either I'm gonna drop them on this channel or I'm gonna drop them on my second channel. But I'm gonna have a lot of videos about cryptocurrency and how to manage that, and just basically everything from if you're a beginner to if you're advanced to how to get yield, blah blah blah. And it's a bunch of videos, man. So join my members channel once we unlock it, and I promise you won't regret it.
Global attention because of its massive potential upside. Some early adopters saw life-changing returns, and many believe blockchain has the power to revolutionize industries. It's also accessible 24/7, and you can trade from anywhere with an internet connection. But with that potential comes serious risk. Crypto markets are known for extreme volatility. Prices can swing dramatically in hours or even minutes. There's also regulatory uncertainty. Different countries treat cryptocurrencies in very different ways, and future regulations could impact the market significantly. Also lose your digital wallet password or private keys.
Fucked.
And your crypto could be gone forever. There are no customer service numbers to call or recovery options. Commodities are physical, raw materials that are bought and sold in global markets. Think gold, silver, oil, wheat, natural gas, or even coffee beans. These are the building blocks of the global economy, and their prices are influenced by supply and demand, geopolitical events, and natural disasters. Investors often turn to commodities as a way to hedge against inflation or protect their portfolios during times of economic uncertainty. For example, when inflation rises, the value of paper money tends to decline. But commodities like gold often hold or increase their value. They also help diversify a portfolio, since their performance doesn't always move in sync with stocks or bonds. But commodities are not beginner-friendly. They can be highly volatile. A drought, a war, or a sudden policy change can cause prices to spike or plummet. Predicting commodity prices requires an understanding of global trends, production levels, and complex trading instruments like futures contracts. Additionally, direct investment in commodities often involves more than just clicking buy. It may require trading on specialized exchanges or through funds designed to track these assets. Options and other derivatives are advanced financial instruments that allow investors to speculate or hedge based on the future price of an asset, usually a stock, but also things like commodities, currencies, or indexes. With options, you're not buying the asset itself, you're buying the right but not the obligation to buy or sell it at a specific price within a certain time frame. There are two main types. A call option means you believe the price will go up. A put option means you think the price will go down. Options can offer very high returns with a small upfront investment because of their built-in leverage. That makes them attractive to investors who want to profit from short-term movements without owning the actual asset. They're also used to hedge against losses, for example, protecting a stock portfolio during a downturn. But the risk is just as high. Options are complex, time-sensitive, and can expire worthless. If your prediction is wrong or you mistime it, you can lose more than your initial investment.
My bad. Just to stop that one, I didn't really get that shit, I'm gonna be honest. But my nigga, we on a time crunch, so let's keep it going.
Certificates of deposit or CDs.
The only thing I got from that is if your shit expires, so let's say you want Apple to hit 200 by next week. If that motherfucker expire, you're cooked. And I don't know.
Are one of the safest and simplest investment options out there. Ideal for people who want guaranteed returns with little to no risk. Here's how it works. You deposit a set amount of money into a CD at a bank or credit union for a fixed period of time, typically anywhere from 6 months to 5 years. In return, the bank pays you a fixed interest rate. When the term ends, you get your original money back plus interest. CDs are FDIC insured, meaning your money is protected even if the bank fails. They're great for short-term savings goals or for parking funds you want to keep safe, but still earning a little interest. However, the trade-off for this safety is that returns are relatively low. Their returns are generally lower than riskier assets like stocks, and their rates may be higher or lower than a high-yield savings account, depending on the market and the CD's term length. Plus, if you withdraw your money before the CD matures, you'll face early withdrawal penalties, which can reduce or eliminate your interest earnings.
I actually had a homie, his mom was in like a CD, which is, I forgot which bank it was, but she was getting like 10 or 15%, which is like in 2026, if you're getting 10 to 15% with the bank, bro, that's fucking absurd. I don't know what bank she had, but yeah, bro, that's it gets crazy once you guys have a lot of money. Like once you're playing with 250 to like 100K, bro, or even more, it's just like you get a lot on your return. Let me tell you that much.
Private equity and venture capital are types of investments that involve putting money into private companies, those that aren't traded on public stock exchanges. These are high stakes, high reward opportunities. Private equity typically involves investing in established businesses that need capital for expansion, restructuring, or even complete turnaround. The goal is to improve the company's performance and eventually sell it for a profit, either through a sale, merger, or IPO. Venture capital, on the other hand, focuses on early-stage startups with high growth potential. These companies are often in tech, biotech, or other innovative industries. They might not be profitable yet, but investors are betting they will be big in the future. The potential upside is massive. You could be investing in the next Amazon, Google, or Uber, but the risks are equally large. Many startups fail, and private equity deals often require large sums of money tied up for years before any returns are realized. These investments are usually restricted to accredited investors, those with high income or net worth.
This reminds me of like getting in Bitcoin early and getting like in just a crypto. Like, bro, you could dead as, like he said, you could find the next Amazon, bro. Imagine you just believe in a company so much, you just invest in that motherfucker, you get like 10,000% return over like 3 years. Cause it's just like the way this shit works. It's like people don't know about it, and then it gets put on the exchange, and then now more people know about it, and now more people are buying, and then eventually the company goes public, and then blah. It's always just like, bro, if you get in, this why the saying the rich get richer is so true, bro. Cause these niggas could just throw 10 bands, boom. Let me just throw this 10 bands in a fucking dick stock, whatever it may be. Boom, 5 years pass by, nigga didn't even think about that money, and the next thing you know, shit, 50K, a 5Xer, some crazy shit, bro. Choo.
Due to the high risk and long time
Man,
horizon.
oh man.
Art and collectibles fall under the category of alternative assets, investments that go beyond stocks, bonds, or...
What Jay-Z said, he said, I bought some artwork for 1 million. 2 years later, that shit worth 2 million. Few years later, that shit worth 8 million. Man, I can't wait to give this shit to my children. Ooh, come on, man.
real estate. These can include fine art, rare sneakers, vintage watches, comic books, Pokemon cards, and other
Pokemon
culturally
cards are
or
going
historically
crazy.
significant items. What makes them valuable? A mix of scarcity, demand, cultural relevance, and the prestige of ownership.
Yeah.
Unlike publicly traded investments, the value of collectibles is often driven by emotion and exclusivity. That makes them especially appealing to collectors or enthusiasts who understand the market. But investing in collectibles also comes with serious challenges. These items are typically hard to sell quickly. Price
I wouldn't say this is really well, it could be investing. Excuse me. This could be investing, but only if you know what you're doing. Like, bro, even for example, you could invest in spider hoodies, bro. You could literally grab these and resell them. It's a little tip. I should have put that on the members channel only. But anyways, bro, y'all could literally grab anything. Like, this motherfucker's selling Pokemon cards. Pokemon cards.
Prices are subjective, and finding the right buyer can take time. Plus, it often requires deep, specialized knowledge to know what's truly valuable and what's just hype.
Hell yeah, bro. These are the videos I love, man. I love making these videos. I love just reacting to finance content, man, because it's just so important. Like I said, man, it's not everything, but it's just so important. Like, and man, what your parents are doing right now, y'all, if you were doing at their age, like saving, actually trying to save money, maybe some of your parents invest, and maybe your parents just, like, you know, budget. If y'all were doing it at this age you are right now, bro, man, you'll be so ahead, bro. Y'all will be so ahead. But it's just like, that's why I'm here, though. You feel me? I'm here to show y'all these videos, bring you this content, give my takes on it. And yeah, man, that was a good ass video, though. I learned like 3 new things I had no clue about. Anyways, I'm gonna catch y'all in the next video, man. Appreciate y'all watching. Peace out.